on there. I just realized. Let me put on headset.
Yeah, good call. I got one.
Shaun, we'll be right there, buddy.
So I'm gonna come in, but I'm not gonna log in so it shows the
We're live, by the way.
So I guess I shouldn't talk trash about it anyway, right?
No. Having some technical difficulties, folks. We'll be with you shortly, but we want to actually be able to hear Shaun, so we have to log in on our phones. So, you know, life can be a shit sandwich sometimes. I want to load my Enter Studio. Oh, let's add Shaun. Allow. Stop cam. Enter Studio. Shaun.
Gentlemen,
How are you, sir?
I'm in great form. How are you guys doing?
Awesome. You know, we're still getting that crackle on this mic.
I'm getting you multiple times, Brad. I don't know if it's because you're on a phone.
I'm going to mute this mic, Joe. Are you on your headset? Okay. Is that better? Can you hear me now?
That sounds perfect.
Awesome. Yeah. Are you on? I can't hear you.
Can you hear me?
No.
Can you hear me, Shaun?
I can hear you, Joe.
Oh, that's weird.
No, I just turned the mic on. It was going through yours.
I think we're still getting you multiple times now, Brad, whatever you did there.
Yeah, because we're next to each other. Joe, just turn on your mic and just use this.
There we go.
Is that better?
That's perfect for me.
Joe, talk.
Yes.
Can you guys hear him?
We can.
Awesome. Not that you need to.
I was hoping that you guys were kind of in the flesh together. We might see one of those great, heated debates and see what
There
happens.
is no flesh together with Joe and Brad.
How's the show going, guys? How's the show going? That was great to see Charlie yesterday, by the way.
Oh, dude, I always thought of him as like this just nice guy, just genuine, down to earth, and he and his wife were just amazing. It was really cool to talk to him. Like, I'm gonna put that on a Monday, but just a genuinely nice person, still motivated by the mission. He did a little rant about freedom and media and all of that. It was a lot of fun to get to meet him, because you kind of see these people as celebrities, whatever. Here's a guy who went to prison for having he did some things, so don't get me wrong, but
I think it's important, again, when somebody is in federal prison, to actually look at what they did, because there's ranges of crimes. I mean, he was effectively it was an unlicensed money transmitter,
right,
and it was selling Bitcoin to guys who were using it on Silk Road. Yeah. So, I mean, that's a world of difference to what SPF has done.
Oh, please. Absolutely. No, absolutely. And look, he served a year. That video interview you sent, by the way, in our Telegram group was perfect, because that gives a nice backstory, also kind of gives insights into him. So that was great.
I think he's one of the genuinely good guys, and anybody who can take on the Winklevi and win is a fucking legend, as far as
hell yeah, absolutely. Absolutely. All right, so Shaun, this is your day, man, and I think you're gonna tee up some TA training for everybody. Am I correct?
Yeah, a bit, because I have done absolutely no research, and my brain has become an absolute fucking mush in this job range. I decided I'd revert to something I can just bullshit on the fly. So I was just going to give. I know a lot of people kind of are anti-technical trading, or they misuse it, or for whatever reason, a lot of people are not technicians in the charts, and
right.
so, and also I'm going to say, look, there's 1,000 different techniques that people use, but I think there's some really common things that people should look at and understand, regardless of whether you're a technician or not a technician. And the simplest one of these is simply levels. Yeah. So if I take Bitcoin, and I'm going to go through this and try to explain where price has to make a decision. Okay. And this is what we technically call support and resistance. So support being areas where price is going down and it's slowing, or it's come to a decision point, and resistance being where price is going up and it's coming to a resistance point. And it's really not as complicated as people think, except they tend to look in the wrong time frame. So if I just take the Bitcoin chart monthly, and to give a classic example of resistance. So, the question is, why did price in 2019 stop here? Yeah. Why did we go up? What about 13,800 is in any way meaningful to the market? Yeah. And again, this is just a simple example. Well, it's actually perfectly simple. It's because that was the actual monthly top of the market. So when you revisit these types of highs and lows in the market reaches a decision point. That doesn't mean that it isn't going to take it. It simply means that the market has to make a decision.
Right. Makes sense.
And indeed, in the current price range, just to make it more real, you can say, well, why the hell is price stalling at 13,800? What's this, or sorry, at 23K? What is this number and what does it mean? And again, this decision here, whichever way you're betting on the decision, is simply because of this historical monthly support and resistance level. Yeah.
Right.
And so this is what the thing that people should really understand about support and resistance is they're points at which the market makes the decision, and that they are driven by historical action. So as you and again, just to explain my simple view of why 13.8, in my opinion, is a no-brainer in the market, is that typically what you do when you reject off a resistance is you go back and retest it. Okay, you fail and then you break it.
Right.
Okay, and then for it to be proven as resistance or support for the market, i.e. what defines strong support, is if we retest that and we take off again, I'm going to say you'll never buy Bitcoin below 13.8 again. Okay,
got it.
So and you can go back historically and look at this. So again, if you go back to anywhere of significance, you see here, we had a rejection, okay? We got rejected, we smashed through, we came back and retested it. Okay, so this is the definition of price support that's unlikely ever to be tested again.
Right.
And you can do this on multiple time frames. So again, why did the COVID crash actually end here? Well, it's very simple, yeah? That again, respecting the time frame, so it's when the candle closed, that the support level that was defined during the whole of 2018, the boringness of 2018, was actually the monthly close and the ramp off point for the bull run that we had. So, I understand that many people kind of question technical indicators and so on, but actually, if you draw out and you just use a few simple metrics like this, which is identifying important areas. So again, if we take the top of the 2019 run, what you can see is we broke it, we retested it. This is now very, very strong. And guess what happened? Lambo.
Yeah.
Okay. And I think that's really important. And what you're ideally looking for in any support and resistance is this concept of a rejection, maybe another test, a breakthrough, and then a retest. So again, I go back to the lovely days when Bitcoin was, like $100, and you can see exactly the same thing applies. We go up, we reject, we smash through, we retest. This is now uber strong support. Okay.
Right.
And it is unlikely ever to be taken again. Why did Bitcoin bottom during this range here? And again, these things are actually not complicated at all. What you can see here, and if I go into the weekly, you'll see it even clearer, is that we went up again, same basic principle. We tested, we smashed through, we retested, very strong support.
Right.
So there is nothing about these to say that they will hold at all. Okay. But what you have here as a trader are decision points. So when you see price approaching where we are today, okay, which is again historically strong resistance, well, the first question you've got to ask yourself is why is price halting, losing momentum at this price? Yeah.
Right.
There has to be a reason. There's nothing special about 23K. You could argue 20K is a more special number, the 88 from 2017. But that's actually nothing to do with it. It's actually very simply that this is a historical resistance zone, and that price now has to make a decision. That decision is up or down. If the decision is down, okay, so let's give two options here. If the decision is down, then you would expect it to go down and test the next support. And if the decision is up, okay, you would expect it to go up and test the next resistance.
Right. Makes sense.
Okay, so you kind of come. Oops, hang on. Sorry, that's the wrong thing. And I think this is where, again, without getting into all the wonders of Wyckoff distributions and Elliott waves and blah-de. Okay, by zooming out and identifying historical levels, which is really simple. Yeah.
Right. Absolutely.
There's no magic.
Where do all the lines go?
Yeah, there is literally no magic. And you're in a trade. You can say, okay, there's nothing about this test that is unusual. And now I have to make a decision. If I'm long, am I taking profit? Or basically around this decision point, or any of these decision points, I want to effectively zoom in and determine what I believe is next to happen.
Right.
But the decision point itself is of no shock, no surprise whatsoever.
Right. Because historically what it does when it reaches these points. And so either it's going to move one direction or the other. And I think the other thing that's important to emphasize is what you always talk about, which is we always think these happen as we look back. We always think these moves happened in a day. But in fact, they happen over 6 weeks, 4 weeks, 8 weeks, whatever. And there's time, right? This is not something where you have to be looking at the screen 24 hours a day, 7 days a week, and running yourself into the ground. Because if you're looking at the right time frame, the weekly or daily, I guess, but the weekly,
monthly, I would suggest
monthly,
people start with,
yeah, you're not making a decision in a half second, right? You've got time to buy into this. You've got time to see that it's accumulating, and you can make an educated guess. But at the end of the day, the chart will tell you where it's going eventually.
Yes, I mean, I think, again, just from an introduction for people without getting into all the machinations of it, is that the first thing to always determine, if you take out all the CT, bears in disbelief, bulls getting wrecked, and ignore all of that nonsense, and say that there are price levels on charts, okay, that are important, okay.
Right.
And when price reaches that, okay, you have an opportunity to adjust your positions. Take profit, go long, go short, do whatever you want,
Right.
And they're actually not that complex. And I would absolutely suggest that people can just knock these out, on a monthly chart. And then when you get to a decision, okay, and the other thing is you have to respect the time frame. So, for example, this monthly candle doesn't close until Monday or Tuesday,
Right.
It could print up here between here and there, and it could print down here. That's not relevant. It's where it closes.
Yes. And
Okay.
you're imparting that lesson directly to me because I got all excited when we broke 23,000 last week, and you're like,
Yep.
wait for the friggin' candle to close.
Well, again, you know, most obvious in the COVID dump, yeah, is that like we had like what was it, a 50%? I mean, we broke it, but if you're looking at monthly support and resistances, wait for the monthly candle to close. If you're looking at weekly, wait for the weekly candle to close.
Right.
Okay.
Absolutely.
And I think that's really important. So again, I would say to people that like, you know, if you're just looking at decision points, if you're long the market here, okay, be cognizant that it is a decision point. You know, if you're short, you know, you also have a decision point. But the fundamental thing is that where the price decisions are made is not a mystery. Okay,
Right.
Why 13.8 in 2019? Why 23 today? Why 3K, 3.1K back in 2018? Zero mystery, yeah? Why 6K during the COVID dump? There are literally no mysteries here whatsoever.
Absolutely. Niblitz is asking, what are the counterfactuals to this pattern? Does it apply equally to other coins, or is it special to BTC? Are there counter patterns?
I think you can apply this. So technical analysis, in my opinion, the more liquid the asset, okay, the more reliable it is, i.e. the less prone to trader games.
Right.
You know, so in other words, if somebody wants to pump some low, you know, low market cap, low liquidity, you know, coin 1000 on coin market cap, then their influence, the influence of their stock relative to the rest of the money in the market is disproportionate.
Sure. Okay. Absolutely.
So I think that as you move down coin market cap, you should be you're more and more into trader games than you are with Bitcoin. It's too expensive to move Ethereum and Bitcoin, okay, on your own.
Right.
You know,
absolutely.
If it's, you know, i.e. Sorry, Shizzy's question there. Do you believe in the theory we didn't have a blow off top, so we won't have a blow off bottom? We didn't have a blow off top, but we had a swing failure. So and I think the reason for that is actually quite simple, is that historically, I would suggest up to here, it was primarily retail and OG Bitcoiners who defined the price action. Yeah. Right. What we saw post-COVID was institutional trading. Okay. Which is actually substantially more compliant to technical analysis than anything else.
That's interesting.
The entire theory and rules of technical analysis ultimately come from TradFi markets and how institutions play the game.
Makes total sense.
So Shizzy, I think, look, all of these classic blow off tops we had, you know, up to the COVID crash, there are different people playing the games. Yeah.
Makes sense.
So,
can you quickly define for people that are listening that are not active traders what you mean by blow off top?
Okay, so a blow off top is this classic pattern, and I'll go all the way back and put it on daily, is this classic pattern of where you get this massive FOMO run up. So you can see here towards, oh my God, the good old days, November 2018, where basically price just went straight up and then smashed.
Right.
Okay, so you have a bunch of, most of the money in the market are degen retailers that were just long. Okay, the price jams up, something happens, somebody dumps them, and then they're short. Yeah. So it's a sign of a different type of trader, an afraid trader.
So it's a rapid climb and then as rapid decrease rather than spread out more.
Yeah, well, I mean, if you think of it we went from 6K in November, mid-November, to 20K in mid-December, back to 6K, okay, at the end of January.
Right.
Now, they're huge moves.
Yeah.
6 to 20 to 6 in the course of 2 months.
Yeah, that's amazing.
Yeah. So that
Makes
is
sense.
that is a blow off top. Yeah.
Yeah, absolutely.
And I think it's the nature of the people playing the game more than anything else. And again, lower liquidity market and so on and so on. So to answer your question, Sizzy, I think that the reason that we don't see it anymore is that we have better made markets, as in there's more institutional liquidity, there's more institutional market makers who will stomp on this kind of thing. You do see it in altcoins because the markets are not made as well.
Yeah, absolutely. How much, in your opinion, do you think that the dominance of technical analysis based trading in crypto, how big of a driver in overall price is it? I mean, this kind of self-fulfilling concept of so many people practice TA that they see it and they do it, and that actually drives what happens? Or do you think it's really all about kind of just natural price movement and the investors coming in and out?
Well, I mean, market theory would say that price is a forward-looking indicator. Yeah.
Right.
Okay. So obviously there's fundamentals. I mean, we can't ignore fundamentals. I mean, this is one of the most bullish charts in history.
Right.
Yeah?
Absolutely.
So when people are bearish, and I am bearish, I'm still a bear here. Yeah. I'm bearish in this time frame.
Right.
Okay? In the longer time frames, I'm the biggest bull you'll ever meet. Okay. However, when you begin to look at price action, you see that a great way to view trading is to view trading in terms of there's two types of money. There's informed and uninformed money.
Right.
Okay. And I think that's true in every market. Okay. So if you want to, and again, all trading is time frame. Yeah. If you said to me, again, this is not financial advice, and I don't want to be a trader. I just want to hold Bitcoin for 10 years. I go, I don't think it's a great price to buy right here, but you know what difference it'll make in 10 years? Fucking zero.
Exactly.
Okay, so we're talking time preference. I personally think the bear has another 3 months to go. I could be very wrong. Blah 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 blah. Okay.
Right.
But the point about technical analysis is that the patterns in the chart demonstrate the battle, demonstrate the intentions of informed money.
Right.
Okay. So, again, the great example of the easiest example to show here would be 2018. Okay. Where, again, we have this support level. Okay. And you can see price hits off it, it bounces. The informed money is selling.
Yep.
Okay. Comes down here. The uninformed money is buying. The informed money, is bouncing, but they're less enthusiastic. The informed money is dumping again and again. And what you can see is that the buyers are just clearly losing this battle. Yeah.
Yeah.
I mean, like it's literally this is only a question of when it goes down, because every pump up is getting sold into. Okay. And at some point, the buyers are effectively bankrupt and we break down to the next level. So again, this is the question of level decisions. And again, you can see, by the way, the actual level was here, up, retest, take off. So whatever reasons you want to give behind technical analysis, even if you don't believe it's a predictor of price direction, and I'm going to get into that in a minute, that you can see it is a predictor of decision points. Historical prices are determinations of what will happen, of where decisions get made in the future.
Sure. Absolutely.
Okay? When you come down to it, so again, I would just say to people in terms of, let me just clean up this chart again, is first of all, one of the entertaining things that I always find about crypto Twitter is, and crypto traders, is they seem to think 4-hour charts are long time frames. They're not. Monthly is the first place to look, because again, if you look at your asset and if you look at Bitcoin, you can see every single decision point is based on monthly support and resistance.
Sure.
Now I'm going to zoom in, okay, and go, here we are at a decision point, and why is this Bitcoin, obnoxious Bitcoin maxi, a bear? Okay, so all I know is this is a decision point. I could be wrong.
Right.
Yeah. I could be right. But my current bet is that, so I'm going to zoom way down here into hourly charts. Yeah. Okay. And I'll go, there's a couple of factors here that, that concern me if I was above. That doesn't mean we don't squeeze the top and come back again. It's the candle that closes. But I go, what does momentum look like here? Okay. Well, we had a move. Okay. We had a move. Okay. And we had a move. What's, again, the way I look at it, very clear is momentum is waning.
Sure.
Okay. So that is not a particularly bullish sign.
No, absolutely not.
Okay. What you want to see significant resistance levels. It doesn't say it can't happen. I'm just saying that red flag number one for me is that when you take significant resistance levels, and I can go back to 2018 because so many people are comparing it to it. So bear with me here. Jesus. I'll go back to, dailies. And, you know, a lot of people are looking at 2018 and we are comparing it to this God candle. Yeah. Okay. So a lot of people are looking at the charts and going, you know, that was the start of the 2018 run. And I go, well, actually, no, because that candle, okay, was itself a break of resistance. You see, you can see that the sellers are losing the battle. Yeah.
Right. Right.
So typically when you break resistance, you get these God candles. In the same way when we broke this support, it was straight down. And again, you can see, again, we've defined a resistance level. You know, the bears are winning. Oh, the bears are no longer, bears are kind of fucked. The bears are giving up God candle. Yeah. Okay. The difference here is that we've got our God candle into resistance.
Right.
Okay. So that's again, none of this is to say that we can't take it. I'm just saying that you need, I would be very cautious here about being long. And again, decision isn't made until monthly close. Yeah. So
right.
Wicking up and down and all that kind of stuff is not of that particular interest. So when you know, how we get the decision level, that's how we get it. And then how would I analyze the probabilities of this breaking to the upside or the downside? Okay. So first of all, I'm going, look, there's a loss of momentum. Secondly, structurally, it doesn't make any sense for me for a God candle into resistance rather than a God candle breaking resistance.
Right.
Okay. So that's my second warning flag. If I then zoom down and go, well, what's really happening here and by the way, again, monthly, that's all the way back to the monthly resistance from from a year ago.
Right.
And you can see how it was absolutely respected by price initially. Yeah. And indeed, okay, we haven't printed even a single 4-hour close above it. We spiked it. So again, you can see that even from something years and years ago, and when I zoomed out, from a year ago, and when I zoomed down, you can see that it stopped there, and it stopped there for a very clear reason, which is something that happened, 6 months ago or last year at some point. Okay, so again, that's it. So now I look at this and I go, okay, what we have here is a very clear range. We've come up, we've tapped resistance, and now we're just chopping a range, yeah, like we did here. Okay, so now it's very simple to say, I'm at a decision. It's very clearly a decision point to the fucking dollar, yeah. And now all that we're doing is we're printing a range, and the range will have a top and a bottom and a midpoint. And again, you can see even the midpoints are respected, test, 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 test. This is where I would start to look at different factors. So again, looking at monthlies, support, resistance, and so on. And now I'm going to shill Brad, your other company, because I think this is one of the simplest ways for a new trader to look at this. So when we look at this range, okay, which is just this, I'm not getting too excited either. I don't even care if it spikes up here. It's not that. It's literally just a range. Okay.
Yep.
And the next move will be determined. The next substantive move will be determined about whether the informed money is selling here or buying here. Yeah.
Right.
If the informed money is buying here, we're going higher. And if the informed money outside of spikes and games is selling here, we're going lower. Otherwise, why is the informed money leaving money on the table?
Yep.
Okay. So without getting into, there's a whole bunch of technical stuff you can do here, but this is the same range. You can see here, here's price, okay, in this chart, okay. And this is a method that was developed by Fred and Brad and so on in material indicators. And again, I'm not shilling it. And it's an attempt to separate informed from uninformed money. Simply by going
that's a great way to put it. I've never put it that way, but that's a beautiful way to put it.
And how it does that is based on the size of single orders. Okay. So if somebody is buying or selling 10 million, okay, well, there are undoubtedly idiots with $10 million. They don't survive very long in this game. So if you are able to place a single order of 1 to 10 million in this market, there's a very deep, sorry, am I not sharing that?
No.
Okay. So hang on. How do I?
Didn't realize you were sharing it.
Okay. Share this tab instead. Oh, sorry. I'll start again. So we have here the same range, micro range that I discussed before. This is price, and down below here we have an attempt to, which I think is a very smart attempt to identify what informed money is doing. Okay. Right. And how informed money is determined. And by the way, I'm not a shareholder. I'm not shilling this. I don't get fucking anything. I just think it's a very powerful tool when you combine it with decision points. Okay. That's all. Okay. So I'm not, if I thought it was shit, I would say it's shit. I don't think it's shit. I think it's very powerful. So, I'm not known for holding back my views. Okay.
No, of course. No, definitely not.
So again, we're just in a chop range. Okay, we're at a decision point, and now me as a trader in these time frames, I have to go. I'm not interested. I can wait for the decision to be made. Maybe not an unreasonable, but being like a small brain degenerate trader, I want to take a trade here. So am I keeping my longs? Am I taking profit? Am I longing or am I shorting? So since we're clearly in a range, we're chopping. I want to know what is informed money doing at this level. Okay. Right. Price is going sideways. And what this tool allows us to do is to see what the larger stacks are doing on exchange. This is not on chain. This is not blockchain analysis. This is literally what are the large orders doing? And again, the warning sign here and let me just turn off the warning signs here for the bulls are that you can see price is chopping and whales are selling into the chop.
Yep.
Okay. This is distribution. Yeah.
Yep.
Okay. And these are people who are trading, 100K to $1 million spot. So it's not leverage. That's real money. You trade 900K. It's actually 900K, not, 9K with some degen 1000x leverage. Okay. It's real money. Okay.
Exactly.
And you can then see the people who are doing 1 to 10 million, okay, are also selling the range. And indeed, if I zoom out and I look at the entire move, so this move started here, we went up, boom, we went up. And what we can see is that the smart money or the big money, the really big money drove the pump and has just gone since then. They weren't even interested in the last bit of the move. They've just gone, I'm the fuck out of here.
Yeah.
Okay. And again, you can see the smaller money is basically rode the whole thing. But since we've hit this range, it's out only. Now, this data can be, there's no absolutes in trading. But the point I'm making is it's not difficult to determine by zooming out a decision point. And then all that means is you as a trader have 3 decisions, but you've got 2 decisions to make. I'm going to ignore it. Yeah. I'm not going to play, or I'm going to play. And basically I have a decision to make. Do I want to be long or short? Do I want to have long or short exposure in this time frame, in this market? So all I'm kind of doing is giving what I believe is a fairly simple way that will help people to think about that. And again, using this tool. There's loads of other factors that I personally would go into that I'm not going to bore people with. But the reason I've been kind of, and again, it's not financial advice. The reason I've been kind of warning people about this level is that there are enough red flags here to exercise some caution. I could be wrong. Yeah. I could be wrong. But this looks dangerous to me.
The data does not support that you are incorrect, or the data supports that you are correct.
Well, my view is based on the data and other factors. Okay. Right. And the other factors, again, are, fairly, I mean, I was going to use the term advanced technical analysis, but, I don't want to kind of overblow it. Okay. I'm just saying there's enough red flags here for somebody to at least exercise a little bit of caution, because what you don't want to see is informed money accumulating the bottom and getting the fuck out.
Yep. Makes total sense. What, besides kind of, we don't have to get into how to use them or anything. I'm just curious what other tools you do use on the charts from a TA perspective.
Yeah, I mean, I'm a big advocate of Elliott waves, which a lot of people, and again, I'm going to go back to this horrible chart, which when I first appeared on your show, hang on, Brad, I'm just going to have to share a different screen, 1 second. So if anybody has had the misfortune of having to listen to me in this show, you'll recognize this chart. This literally hasn't changed since the first show. Yeah. So,
right.
So this C to D move, while I might have adjusted the test of it, okay, is basically the same chart. I have been waiting for a test of this upper line since last summer to create a trade.
Wow.
Okay. What is worrying, you could say, or not that worry is useful. Okay. So anyway, this is an Elliott wave structure, which just tells us that we need to do a 1, 2, we need to do a 1, 2, 3, 4, 5 down. And again, nothing to date has convinced me that the bottom of the market isn't down here somewhere or worse.
Right.
Okay. If we take this level, then I will readjust my view. Yeah, if we take it on a monthly basis. But there's nothing about this that utilizing Elliott waves the way I utilize it that's unexpected. Other warning signs that I would have would be that we are printing what us technical traders call bear div. Yeah, so we have price going up, okay, and we have momentum indicators going down. This is kind of classic bear div. And again, a sign that the bulls are losing strength.
Right.
Okay. And again, you can actually look, we had exactly at the bottom, the opposite, which was bull div. Okay. Where you can go, price was going down and momentum was going up. So this is a buy, this is a sell. So again, not talking about the market can spike, the market can do whatever it wants. But other things that I will look at from a technical perspective are deviations, confluence of factors. And then finally, sorry, guys. I share that again? Sorry. Again, let me just, where are we here? Okay. Sorry, Brad. I clicked the wrong button.
No, no worries, man.
You can.
Oh, there we go.
Okay. So there's another couple of factors that I would look at here, which is moving averages are quite useful. Again, a lot of people criticize moving averages, but you can see that this is again, weekly, 200-week moving average has been acted as price support for Bitcoin its entire life and was lost this cycle. That's not unexpected. But when you combine that support with confluence, we are coming to what's called a death cross. This is the first time in Bitcoin's history. And that's where the 50 moving average in the next few weeks is going to sink below the 200-week moving average. Okay, that's bearish. Okay, that's just bearish. Unfortunately,
I would probably qualify that as an understatement.
It's. I was reading again Twitter. I fucking hate it, but I was like, somebody coined it like it's like, I don't know, the super death cross or whatever. Like, and I know, look, the terms are, it's a death cross, you know, and then you've got golden crosses. So again, this time is different.
Which is not a golden shower.
No, it's not. And finally, if I look at monthly, and again, I go, I have equally on monthly moving averages, I have this trend line that Bitcoin's always hold, and all that we're doing here is coming up to test the underside. Yeah.
Got it. Yeah.
So there's,
Shaun,
you know,
can you hear me? Okay.
Yep.
Yeah. My question. So with the 50-day, the death cross, that sort of implies that the slope of price is falling off steeper at that point. So everybody's capitulating and bailing. Is that right?
Yeah, I mean, these things are very laggy indicators. So again, to put this in some term, yeah, a 200-week moving average is the price history of Bitcoin for the last 4 years. Yeah?
Right.
50-week moving average is the price history of Bitcoin for the last year. So it's no surprise that the 200, the 4-year trend is up and the 1-year trend is down. However, they are trigger points for traders. Okay, so larger, slow-moving capital will move on these types of things. Okay, and people will determine, you know, whether to engage with an asset or not engage with an asset. And there's another really curious factor that I would say to people here is that whenever a death cross is imminent, price moves towards it. So here you see this was the 50-100 death cross, price moves toward it. Here, this is the 50-200, price moves towards it. Here we had a death cross here, price moves towards it.
Very interesting.
Yeah, so that's one of these curious things. Here you can see we had a cross, price moves towards it.
Why do you think that is, Shaun?
You know, I've debated that with people and I haven't got a clue. Okay. Like literally, it's one of these things where I go, it's just a curious artifact and I have no idea whatsoever, and to be honest. But again, like we're into the weeds of TA. I think that for somebody who may be skeptical about it, and skepticism is reasonable, that it's not difficult to identify decision points. And then what people like me will go is if we have confluence of multiple decision points, here we have monthly resistance, here we have moving average resistance, and here we have trend line resistance. Yeah.
Right.
That's a lot going on. That's triple resistance. Yeah. That's a tough nut to crack. Okay. It doesn't mean, again, it doesn't mean, but now once I realize there's a decision, I now need to go in and zoom in. And again, I think tools like material indicators, technical analysis, and so on are important. And that's all I'd say is that it's been an impressive move. Like it's been an incredible move. Look at that candle. This candle is not
right.
Printed. Don't get trapped. You know, nothing changes sentiment like price.
Right.
Yeah. So what this pump has done has created a bottom is in bullish sentiment. If you're not positioned and you think it's bullish, it will probably go up, come down and retest. This is a better buy than this.
Right.
Remember, support, you know, resistance turns support, gets retested. So it may take months.
Right.
Okay,
right.
So if you're a bull here and you're going, oh my God, I'm afraid I've missed it. I would make an argument, again, not financial advice. If you think this is going up, wait for it to go up. It will almost certainly have to come back and retest it. This is a better buy, and it'll test your nerves doing it. Yeah.
Yeah, absolutely.
That's
awesome.
Yeah, I again, just the way I look at the market, again, I am normally wrong about these things, but at least it's hopefully a simple guide
He's not normally wrong.
It's
But
more
it's not financial advice.
It's not
This
financial
is another
advice.
humble Irishman.
It's more I guess a way for people to. A lot of people would never think, why the fuck would price after that massive pump stop at 23? Like, why?
Right.
What's happening? Yeah, and all I'm saying is it's really not that difficult to identify why it stopped
It's
here.
happening.
Yeah.
Yep.
It's a bit more complicated to identify what's going to happen next.
Right.
Yeah.
But there are simpler things to look at than going deep into the weeds and trying to learn everything about TA that you've learned over the years right now. So these things that you're pointing out to people make it gives you guideposts, right? It gives you things that you can look about and think about instead of thinking, oh, that looks like a really strong candle, I think it'll keep moving. And it's like, no, there are some rules that you can follow to zoom out and really give yourself breathing room to think about what it can be doing and why, and then make decisions based on simple things until you have a ton of experience doing the kinds of things you do.
Yeah, I mean, or even if you're not that comfortable with kind of doing this because you go, why didn't that hit and so on. Okay, I would actually say, look, zoom in. Okay, price does some really simple stuff. Yeah, price does a big move, goes into a range. Yeah.
Right.
And this range always lasts longer than people want it to. Whereas normally price moves and people are trying to trade here. It moves, goes into a range. During this range, you've all the time in the world for it to make a decision. Yeah. Price goes into a range. Yeah. Let it print. Let it give you some fucking info here. Yeah. Okay. And decision point. Price moves into a range. Decision point. Yeah. So when something is pumping or dumping, it will hit a range, okay, and it will chop, okay, and then you get to make a decision.
Yeah, makes sense. Love it. Let's catch up with. Go ahead.
No, that's it. More is less with TA. Yeah, it's really it's really far less complicated than people think it is.
Let's get to some of these comments. Max would like you to trade his stack for him. I said I can't trust myself trading, so just start a fund and let Shaun trade it for us. Yeah, I think we would just be an annoyance at that point. So
yeah, and I'd end up in an 8x4. I'd do a Charlie straight. Dude, I have enough troubles in my life trading my own stack.
Niblet says TA is itself an input to TA. Through market behavior, mathematically, feedback loops often create weird, unpredictable dynamics. On a large enough scale, though, feedback loops can normalize into relatively regular patterns.
Yeah, I mean, again, a lot of people want a why. Yeah.
Yeah.
Okay. I know how many billions of dollars we're investing as a species into why gravity, God particle, Higgs boson, and all of that. Okay, I'm a greasy engineer. Okay, if the hammer drives the nail into the wood, I use the fucking hammer.
Love it.
Chuck says the algo that Shaun is describing to identify decision points is not hard to implement. Wouldn't be hard to make a bot that waits for those points and then trades up or down as you prefer.
Yeah, awesome. there are loads of actual tools for this, by the way. So I'm just, I'm not suggesting you go off and buy the tools, but there are lots of indicators where, again, it'll automatically generate these levels, the infamous 13.8 level and so on and so on. Yeah. I think I use these only because I know how to do it. Yeah.
Yep.
Sometimes you just need to put the hard work in. Yeah. And so you understand it. So you're just not reliant on some coder in the middle of nowhere making decisions about your money. So yeah, these tools are, again, you can see they're very clear. Yeah. You can see that if we break here, we're going here, but I don't need that for these decisions. Yeah. I've got a decision point. We're going to here ultimately, or we're going to here. That's it. End of. Not interested. Yeah.
Love it. Well, Max and Shaun, Chuck are scoping out a bot, but then Chuck said there's another way for you to do this on your desktop, just not quite ready for end users yet. Hint, hint. Chuck said,
That's interesting, Chuck.
Question for Shaun: how much of this decision process for you has automation behind it now, or are you putting on your wizard hat daily and deciding your plan for the day?
Okay, so I run. It's my opinion, and I run a lot of algos, yeah, and I do a lot of volume. Okay,
Right.
and anything low time frame, I automate. It's in an algo.
Yes.
It's running. Yeah,
Makes
anything.
sense.
You know, this is going to be. This is my third swing short of this bear market. Yeah, so I have a short active from here. I have a short active from here. I'm waiting a year, 6 months to get a short active from here. Yeah. I don't rely on algorithms to make those kind of trades.
Yeah.
Okay. That said, while all these little candles are printing like this, yeah, I've algos that are just fucking buzzing away in the background, man.
Beautiful.
And that's something else. Sorry, I should say as well that trading multiple time frames is really useful. Yeah, having if you had a spot long from here or anywhere back here, I personally wouldn't be selling this. I'd be creating a hedge short if I thought this was going to break down. So indeed, my own position, it's not a secret. I'm long from down here, but when I say I'm shorting, I'm not selling my stack. I'm taking some of my Bitcoin and creating short positions from it. In this way, I can never lose.
Yeah, I love it.
Yeah, all I can do if I'm wrong is I might lose a little bit of profit.
Yeah. Euphoric said you could ask ChatGPT to code a bot for you. Then he said, normally I would find tedious, but I've never felt that listening to Shaun. So
dude, we need to meet in a pub and I can destroy you of that notion about how tedious I can be.
Professor Shaun has a 5-star rating for today. Niblet says better to actually sell BTC on sell signal or hold BTC and just short / borrow against the high sell signal.
Again, for me, I trade perpetual con swaps. So, there's something I've said this before, like even in a bear market, okay, just by holding a short, I'm generating interest. Yeah.
Sure.
So, and again, this is like, we're now into the kind of contractual end of it. I mean, whatever you believe the decision is going to be, just realize the decision and the significance of it, because here's the significance of it. We're going to here or we're going to here. That's I don't care how it gets there. Yeah. I will be quite happy to say if we break up, we're going up to test 35K and have another decision point. And we can fuck around doing that. If we break down here, we're going to test 13.8 and then there's another decision.
Yep.
So,
and again, this is not financial advice.
This is absolutely not financial advice. I'm going to say I'm usually wrong. Okay. But the significance of the level should not be. And again, you only count that significance when large time frame candles close.
Right.
Yeah. Not when the 4-hour breaks 23. It's fucking irrelevant.
Got it.
Sorry, bro, that wasn't aimed at you, mate. Sorry.
No, it's all good. I am happy to have that reiterated. Absolutely. That we all have to learn those lessons.
It's funny, Shaun, as you say, you're usually wrong, but you have the big stack sort of spot long, and then you set up hedge shorts. So are you picking which side of that you're wrong on? Because the other side you're right on.
That's something, you've hit it. A lot of people go, oh, you lucky fucker, you were long from way back. And I go, look, when this market bottoms, okay, I personally believe, not financial advice, that for Bitcoin, okay, as in a 10-year hold from I think the next bottom we won't see again for decades. Yeah. Okay. Wow. So everybody, if you think the way I trade is good, you buy your spot bags wherever we bottomed and you trade against it for the next 10 years and you can never lose money if you get the first decision right. All you can do
Right.
if you're wrong is lose some profit.
Right.
Mhm.
That's beautiful. That's beautiful. That's great. Shizzy said, "Man, I was feeling so good about the markets until 12:30. Be right back. Got to put my jacket back on."
Yeah, Shizzy, let's be clear. I don't know what's going to happen. Okay, here I know, and you can see it in the price halting here that a decision has to be made. I'll put my chips on the table. Yeah,
Love it.
The other thing I would say is when I put my chips on the table, the first thing I look at when I place my chips on the table is, what if I'm wrong? Can I deal with the consequences? Yeah.
Yep.
Yeah, I'm not playing roulette here. If you want this market to be a casino, it's more than happy to let you put your chips on the table and hit red.
Hell yeah.
That's not the way I trade. I love gambling. Yeah. When I want to gamble,
Yeah.
I go to a casino. I don't sit in front of charts.
There you go.
Love it. All right. Anything else people should know, Shaun?
That's it. I just say be safe out there. Yeah. I'm going to say it again because I'm always saying it. I'm just going to repeat it. There's way more time than you think there is. Yeah.
Yeah. Well, give Hillary our best, and we'll catch up with you next week, buddy. I hope you have a great weekend. Max, Shizzy, Niblets, Euphoric, Chuck. I think that's the gang today. Thank you so much for joining us and participating. Shaun, thank you so much for imparting more wisdom and knowledge. We should probably just turn the show into a 5-day-a-week Shaun show. It'd be more value than the two of us.
Dude, I'm already out of topics, so if anybody has something they want to
I got topics for you. I'm gonna load
the
you
old
up.
Maxi view on, stick them in the Telegram channel. Yeah.
I'm gonna load you up. Don't worry, we'll get you set. Yeah, we'll create a topics for Shaun channel. Anyway, please join us in the Telegram. We're having a lot of fun. Justin and I are going toe to toe on a topic comparing Phantom to Hedera, which those are two words together I never thought I would say in my life. But that's crypto. We get into topics we don't expect to get into. But there's a lot of interesting discussions happening. Meeting a lot of really cool people. If you're listening to this on the podcast, we've been joined by so many people that have only ever listened to it sitting in their car, walking their dog, delivering the mail on their motorcycle. We really, really are having a blast getting to know everybody. And I think as it grows and more people join, we're going to start doing some things together beyond just talking shit. So I hope everyone will take the time at t.me/Mission DeFi, t.me//Mission DeFi. That's a place to hang out. If you are listening on Apple or Spotify, I'm begging you, please go give us a review. If you're on YouTube right now watching, give us a thumbs up. If you're watching on Twitter, retweet the tweet you're watching, and come on, let the world know. You've got 4 million followers, so tell them all about us and the brilliance of Shaun on the show. We love you guys. Hope everyone has a fantastic weekend, and we'll talk soon. Shizzy said, great show today, guys. Thank you, Shizzy. And Mr. Muccioli, thanks for joining us. Gandalf has resurrected. Great lesson. What? No more shit talking, as Euphoric says. No, that will never go away, my friend.
Yeah,
Never.
we'll save that for Monday.
Yeah, never. Love and appreciate all of you. Shaun, have a great one. Talk to you soon, buddy.
Thanks, Shaun.
Take it easy, guys. Enjoy the shit coining out there.
All right. Have a good time. See you. Bye-bye.
See you later. Bye, everyone. See you Monday.